And speaking of those toxic assets, while those banks are trying to figure out what to do with them, investor Sam Zell is setting up to buy some of those distressed assets. Let's go now to Monica Bertrand for the story.
And Scarlett, at one point, Sam Zell dubbed himself the grave dancer for turning a profit on troubled assets. Zell is set to earn that title once again. The billionaire investor is putting together a $625 million fund to buy distressed securities backed by assets including commercial real estate. Now, the fund marks Zell's return to distressed investing after his $8.3 billion buyout of Tribune ended in bankruptcy for the publisher in December. Now, real estate investors say that Zell's new fund is a sign of things to come, as a large number of loans are coming due after developers borrowed heavily several years ago to buy property at record prices. Meanwhile, those building prices, rents, and occupancy rates are falling. Those delinquencies and defaults are rising, and banks are tightening credit standards, making it more difficult for borrowers to refinance those loans. Sam Zell and the unnamed backers of his fund are betting they'll profit by purchasing debt for pennies on the dollar and negotiating for higher prices or equity stakes as troubled borrowers are forced to reorganize into bankruptcy. Zell is salivating over his new prospects. In May, he told investors at a Citigroup real estate meeting that he was interested in mortgage securities secured by commercial loans, I should say. A category that includes land, hotels, office buildings, also apartment complexes. An estimated $1.5 trillion of commercial real estate loans, Scarlett, are expected to come due during the next 5 years.
Thanks so much, Monica.